Nasdaq trader is analyzing Elliott wave, a flat correction pattern. Nasdaq trader is analyzing Elliott wave, a flat correction pattern. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis. Guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders. For Elliott wave trading, our website is www.24elliottwaves.com. The title of this video is Nasdaq trader is analyzing Elliott wave, a flat correction pattern. All right. So I would like to refer our traders back to 24 Elliott Wave YouTube channel. You will find various tutorial about the Elliott wave, a flat correction. Today I want to highlight a few aspects of the Elliott wave, a flat correction pattern. All right, what you need to pay attention to, what is happening during the formation of the Elliott wave, a flat correction pattern. All right, and how one can use it, okay, for day trading and swing trading, even investment purposes. Okay, so pay attention first. So the first thing that one should know, okay, about the flat correction is the internal waves. All right, so when we are talking about the internal wave, is how the financial instrument, okay, moves from A to B. All right, so here if you look at this blue line, you can see that if we consider this as a price move, we will see that the blue line went up in 5 moves. 1, 2, 3, 4, 5. So these each move constitute the internal waves of this move from here to here. So when we are talking about the internal waves, okay, we are talking about how the price moves from A to B. So the first thing that an Elliott wave practitioner should know about the flat correction is the internal wave of the flat correction pattern. The internal waves of the flat correction, the Elliott wave flat correction, are 3, 3, okay, 5. All right. Now 3, 3, 5. So here it is. This is one example here that I get on Google. You see here, price went down 1, 2, 3. That's the first 3. Okay, and then it went back again 1, 2, 3. Okay, that's the six. So 3, 3. Okay, and then the 1, 2, 3, 4, 5. So when we are talking about the internal waves of the flat correction, is 3, 3, 5. All right, 3, 3, 5. Now, when we also say to trade, when we talk about 3, 3, when we say 3 and 3, that's what we call a double retracement. So once we have one 3 going down, the second time we have another 3, that's what we call a double retracement. So I don't want to expand too much about the flat correction. If you want to know more, go to 24 Elliott Wave YouTube channel or 24elliottwave.com and check out a flat correction. You watch excellent videos, okay, about the flat correction pattern. Okay, let's continue with our discussion today, talking about Nasdaq trader is analyzing Elliott wave, a flat correction pattern. All right, so we know now. So the first thing we want to know is the internal wave. So on this chart here, I'm on a quarterly chart, so maybe you have never seen a quarterly chart, so this is how it looks. All right, so if you are only on a daily chart, hourly chart, and 5-minute chart, okay, I encourage you to go a little bit to the higher time frame. Okay, a flat correction is a corrective wave. All right, so the first thing that you should come into your mind when we are talking about a corrective wave should not be in a rising channel or in a declining channel. Normally, okay, a correction should be flat. Either we see a triangle or we see, okay, an horizontal channel. It makes sense? So a flat correction is, a flat Elliott wave pattern is a corrective wave, all right? The internal waves of the flat correction can overlap each other, contrary to, okay, the impulsive wave. During the impulsive wave, the wave should not overlap, okay? All right? But the corrective waves, the internal waves of a corrective wave can overlap. All right? So this will allow you to avoid, labeling, a wave wrongly. All right? So I'm going to use the pink here because I have red already. So pay attention carefully to what we are doing here. And because I want traders to master this subject once and for all. All right? Stay focused because I have a few lines on my chart. Okay? So you can see here on my quarterly chart, you can see price went down and then went up like this and then come down. Feel free to disagree with me. All right? And then again, it went up like this and then come down like this, okay? If you can't wave and you are not sure, you can call a little chart to see what am I counting, is it good or not? The chart will tell you that, no, it didn't go up here, it went down instead, all right? So you will know that you've done something wrong or you force it, okay? Just do it like a chart, just do it. Went up, it went down, it went up, it went down. Just go flow with the price. Don't lie to yourself. Very simple, okay? Wave count, okay? So here we have, if you agree, so it went down, it went up, it went down, it went up, it went down, it went up. So we have, this is the first three, 1, 2, 3, okay? First part of our flat correction, and then 1, 2, 3, second part of our flat correction. Let's continue drawing on my chart. All right, so now here, very simple. So it went down, yes or no? It went down from here to here, yes or no? This is a corrective wave, so the wave can overlap, okay? So it went down like this, now it went up like this. Let's color it again to pink, all right? Ladies will love this very much. Pink colors all over the place. Okay. So instead of using blue all the time, lady will say we are sexy, so we don't want that. So okay, so then it went up again like this, okay? And then it went down like this, yes or no? So feel free to disagree with me. So I think everybody should agree with this one, okay? Because I'm not lying. So it went down like this, not in straight line though, you see? Went 1, 2, 3, down, yes or no? Yeah? And then it went up like this, and then it went down like this. Now what's happening here, my friend? What's happening here? It went up again, here like this. But not in straight line, it went up again in free. So, but in the language of Elliott wave traders, when we say free, we are thinking about corrective wave, so it's normal. So here, 1, 2, 3, it went up again here. So far, what do you see? We see 1, 2, 3, okay? 1, 2, 3, all right? And then 1, 2, 3, 4. 1 is missing, so the last bit should be 5. So there is a high chance that this will pull it down more below this low here, a little bit more down. So you see, by knowing the internal wave of a flat correction, one can even forecast what is likely to take place. Now, I did not say what is guaranteed to take place, what is likely to take place. So the reason why I use that word is that sometimes, okay, some of the smartest Elliott wave traders can be a little bit too confident and say, definitely it will come there. I don't try to get into that game because the market can teach you some beautiful lessons, okay? It's likely, there's a high chance that this move down, the price should continue to go down to complete the pattern. There's a pattern being formed in this case. The pattern that we are talking about is the Elliott wave, a flat correction pattern. All right, so here we see, so that's why I said to you, the first thing that you need to know is the internal wave of the flat correction. You will hear me sometimes say that the Elliott wave principle allow Elliott wave practitioners to look inside the price instead of looking at the price. What that meant is that when an Elliott wave practitioner is looking at the chart, he or she is looking at the internal wave to dictate or to identify or to label a specific wave pattern. There are 13 specific Elliott wave patterns, and one of them is the flat correction pattern, okay? All right, so now we know the internal waves of the flat correction. In this case, we are talking about an expanded flat correction. There are different types of flat correction. So as I said to you, I don't want to expand it. I will send you to 24elliotway.com, click on flat correction, and you will, okay, know more, okay? So 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. The fifth one is not yet completed. This is a corrective wave. So the wave can overlap and violate the normal impulsive wave, okay, principle, okay? So next question, okay? Next question. Where or when do we have a flat correction? So now we know the internal wave. The next question, when are we likely to see a flat correction developing? You must know. A flat correction usually takes place after a strong bullish or bearish move. So if the previous move is too strong, bullishly or bearishly, if you are in a downtrend, there is a high chance that the following correction, okay, because every impulsive way should be corrected, okay? All right, so life is not all about going up, not forever. You go up a bit, you pull back, all right? You work a bit, you rest, okay? So everything must rest. So the correction is like a kind of rest, harvest time. So when you hear people talking about, oh my God, it's a bearish season, do not sell, sell instead, because it's time to sell, there is a time to sell, there is a time to buy. Don't buy and hold for 100 years, okay? Now, this is to make you laugh a bit, okay? All right, so we know it will usually happen, all right, after a strong bullish move or after a strong bearish move. Now, when do we usually have a strong bullish move or a strong bearish move? We usually have a strong bullish move or bearish move during the third Elliott wave, either in a downtrend or in an uptrend. So if the third Elliott wave is expanded too much, extended too much, okay? What do I mean? So you see first wave, second wave, okay? And then you draw your Fibonacci extensions. So for instance, if the third Elliott wave went to the zone of 314, okay, percent Fibonacci extension zone in relation to the first wave, all right, is highly extended. Now, you don't go to 24elliotway.com and just slowly, you have your time, you go through the videos, okay? So if we have a third Elliott wave that has been too strong, or the fifth Elliott wave that has been too strong, but normally we have very often the third Elliott wave that has been, that's the normal wave that can be extended normally, okay? After a strong bullish move. Sometimes we know that either the first, the third, and the fifth wave can be extended, talking about the Elliott wave extensions. So either the third wave is very, very strong, or the fifth wave is very, very strong. Now, I don't want the video to be too long, so this is a short video that I'm trying to record today. I think I'm already over my 20 minutes, so I got 7 minutes more. I don't want to go into the internal wave of the move before the flat correction bar. Just pay attention to the candlestick bar here. I'm on the quarterly chart here, and the stock that we are looking at is Staples Incorporation, Epic Sierra Papa Lima Sierra, SPLS, a Nasdaq 100 stock, okay, on the quarterly chart. Look at the candles here. It is a strong bullish move. Is the price almost vertical, going in vertical move? I think everybody will say yes, it's quite strong here. Can you see? Quite strong bullish move, almost vertical move, okay? When we have a strong bullish move, a strong impulsive bullish move, or strong, okay, motive, okay, strong bearish motive wave, all right? Either during the third wave or fifth wave, all right, we are likely to see a flat correction at the end of the fifth wave, because the flat correction will take place at the end of the fifth wave, all right, very often. You will see this on the monthly chart very often. You will see this on the quarterly chart very often. You will see clearly sometime on the 15-minute chart. If you are day trading and you do not know the flat correction, you will be going round sometimes, okay? On the 15-minute chart, you see plenty of flat correction happening every day, okay? Flat correction is a beautiful pattern, especially the expanded flat correction. So, the internal wave of a flat correction, 3, 1, 2, 3, 4, 5, okay? 3, 5, okay? When does it take place? After a strong, bullish or bearish move, okay? All right? The flat correction usually will take place at the end of the fifth wave. So we see here, as I draw it here, 1, 2, 3, 4, 5. This is a multi-wave, okay? The trending phase of the area wave cycle, okay? So from here, you see here, price went up from 1991, okay? Stable stock was bullish. This is a trending phase up to 1999. Now, this is the first part of the area wave cycle. Now we have a flat correction that is in place. 1, 2, 3. So when the flat correction began, okay, you know what the price will do. So you just take it one step at a time. Okay, so we see 1, 2, 3. So first thing coming to your mind is this is likely to be a flat correction because we see, okay, a strong bullish move. We are at the end of the fifth wave. See 1, 2, 3. Don't force it. Gently. Okay, just go gently. There's a high chance that you will return back up again. So here it is, 1, 2. Here you'll be thinking that I want to catch this one. So a lot of people see now. Here it becomes very clear to everybody. So you see 1, 2, 3. Now you do 1, 2, 3. So everybody expecting another one more move. Here they load it big time. Because the pattern become a little bit clearer to the general public now, everybody load it. And the trouble is that they push it a bit too far. Normally, okay, a correction shouldn't go above, okay, the fifth wave again. But in the case of the flat correction, they push it again above the high of the fifth wave, creating a new high. Now, I have a little bit of secret I want to share with you. During the expanded flat correction, the B session, B for Bravo, the B session of the flat correction, we are likely to see a low trading volume. So here, that's why I say go to 24elliottway.com, okay? You see here, so this is the A session of the flat correction, 1, 2, 3, that's the A session of the flat correction. 1, 2, 3, that's the B section of the flat correction. 1, 2, 3, 4, 5, that's the C section of the flat correction. Very often, in the case of the expanded flat correction, during the B section of the flat correction, we are likely to see a low trading volume. Okay? If you have any question, if something is not clear, put it in the comment section because I don't want to repeat myself too much. Okay? So, for this flat correction, if I do everything clearly here, okay. So from here to here, that's the A part of our flat correction for this staple stock on the Nasdaq 100, okay. From here to this point here, that's the B section of our flat correction on this chart, quarterly chart. Look at the trading volume. See, the trading volume is going down, yes or no? So, price going up, now price forming a new higher high, but the volume was going down. The professional, you know what? The professional, they laugh at this. The price display a new higher high, but the move that formed the new higher high was under a low trading volume. They will sell. The opposite is also true, okay, or similar situation also true in a downtrend. Price going down, forming a new lower low, but the session that formed a new lower low is that under a low trading volume, professional will buy instead. So, repeat, for the secret for the flat correction, which I want to share with you today, the B session of the expanded flat correction very often not always, very often, will be under a low trading volume. Please do not forget what I said today. If it doesn't make any sense, ask more questions in the comment section, and I will record more video to answer your question. Every video that we record is to answer questions that traders are asking me, and I record video to answer these questions. Okay? So put comments below, question below, and I will be recording videos steadily to answer those questions. Okay? All right, it makes sense? If you disagree with me, put it in the comment section, okay? Say, George, oh, it's blah, 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 okay? Or I see some comment, they say, George, can you make money with that strategy? Okay, or it's good. So here we are. So during the B session of, the flat correction, okay, we are likely to see a low trading volume. As you can see here, it's under a low trading volume, all right? But the trick that you need to understand is that one should know when and where the flat correction will take place and the internal wave of the flat correction. The next thing that you must know if you want to thoroughly master the flat correction is that, talking about the expanded flat correction, when a price forms a new higher high above the high of the fifth wave, you see here I have 1, 2, 3, 4, 5. So the high of the fifth wave is right here. So multi-wave 1, 2, 3, 4, 5, the trending phase in a rising channel clearly from 1991 all the way to 1999. I don't want to count wave here. Okay, so we have a multi-wave in place. This is the high of the fifth wave. And now a flat correction is underway. 1, 2, 3, first part, 1, 2, 3, down. Okay, the B session, 1, 2, 3. Okay, now we have a flat correction here. But the B session of the expanded flat correction will display a new higher high in comparison to the high of the fifth wave. Beautiful, isn't it? So you see that on your chart, you see, price form a new higher high, but they move. This is what we are talking about, okay? Get this one right, okay, my friend? So now the price form a new higher high, but look at this, look at this. Look at how the area wave is beautiful. Now pay attention carefully, my friend. The price form a new high, but looking inside the price, the move that brought the price to display a new high is not a motive wave. Normally, in a trend, it's a motive wave that should propel the price, okay, to display a new high. But in this case, it's not a motive wave that propels the price to display a new high. In fact, it's a corrective wave. What a lousy, okay, new high. You must look for an opportunity to sell, because in a bullish trend, I want to clarify that there are two types of wave. One is called multi-wave. And the internal wave of a multi-wave is like this. Okay, it's formed. This is here. It's a multi-wave. 1, 2, 3, 4, 5. And the wave should not overlap. Okay, clearly, this is the basis of a simple thing that you should know about the Elliott wave principle. So if you are in an uptrend, if the price is going to form a new high, the wave that will propel the price to form a new high can be divided into 5 waves. But for instance, if you are in an uptrend, now we see the price form a new high. But when we check, we look inside a little bit deeper, we notice that the internal wave is a corrective wave. What do we need to do in an uptrend? A corrective wave that propels the price to display a new high. This is an invitation to sell. Okay? Are you getting the message? So the point I want you to understand the difference between the multi-wave and the corrective wave. That's why we look inside the price. What that means is that we analyze the internal wave. That's why I say to you, you want to trade the flat correction. You want to know the internal wave first. 3, 5. Okay? So that's why we are expecting this to go a little bit down more. There's a high chance, not guarantee. Okay? Don't use it as a science. Okay? Use it as a guide. Okay? So looking at this, in a downtrend, the same thing. So if the price form a new lower low, but we check the internal wave of the move that propel the price to display a new lower low, if it happens to be a corrective wave, this is an invitation to buy. Ladies and gentlemen, just need to pause the video a second and I will be back very shortly, okay? Let's continue our recording. The next thing that traders must know about the flat correction is that the B session of the expanded flat correction very often will push the price into the zone of 138% Fibonacci extension zone. Now let me repeat myself again. The B session of the flat correction, the B session of the expanded, repeat, expanded flat correction, because there are different types of flat correction. The B session of the expanded flat correction very often will propel the price into the zone of the 138% Fibonacci extension zone of the multi-wave. So this is the multi-wave 1, 2, 3, 4, 5. Okay, so if we apply the Fibonacci extension from here to here to the multi-wave, okay, we will notice that the B session of the flat correction very often will propel the price into the zone of 138% Fibonacci extension zone. All right, so you can see here on this chart, I use my Fibonacci extension tool. You see here, from here all the way to the top, you can see there is a bit of, you need to, I will say it first, then I will show you something else, okay? I draw it here, I didn't put it to the top of this candlestick bar, okay? I'm going to explain that to you, okay, more. So from here, this is the multi-wave. So we apply the Fibonacci extension to that session, the multi-wave, and the level that the B session of the expanded flat correction will go is the 138% Fibonacci extension zone. You see here, 138.2% Fibonacci extension zone. She came very close to it here, all right? Okay, very close. That's why. So if we see now that we see a multi-wave 1, 2, 3, 4, 5, either we see that the third Elliott wave has been extended, or we have a bullish strong move in the fifth wave or the third wave. So we know that the expanded flat correction will usually take place after a strong bullish move or a strong bearish move. So we see a strong bullish move during the multi-wave, and now we see 1, 2, 3, and then we see 1, 2. Okay, so you are here. You see it becoming very clear now. So you start buying here, okay, for short term or for medium term, you buy here, okay? All right, so this has been many years from 2003 up to 2007, okay? So if you buy here, for instance, you want to set a target. The minimum target is what? Is the first and near resistance level. There's one here, and then there is this one here. But generally, as you are managing your trade, the ultimate greedy target is 138% Fibonacci extension zone. Okay, so you can see that the move, the B session of this flat correction was from 2001 up to 2007. That's a long time in the life of human beings. All right, so you may think it's a trend, but it's not a trend. Okay, it's not a trend. Okay, it is a correction that is still in place. In fact, from 1999 up to today, we are still, this stable stock is still correcting itself. So, because the flat correction has started here, and it's still continuing now until it ends here. So a correction can take too long to form. So this flat correction has started since 1999, and it's still going on. We are now in 2015. All right? But the point I want to make to you that the level that you should not forget is 138% Fibonacci extension applied to the multi-wave, okay? 1, 2, 3, 4, 5. You apply the Fibonacci extension to that session, which I did here, all right? And you will highlight a level of 138% Fibonacci extension zone. Very often, the B session of the expanded flat correction will end right there. You see here? Right there. Once the B session is completed, we are likely to see the C session of the flat correction. 1, 2, 3, 4, 5. We are now waiting for the fifth part of the C session of the flat correction to be completed. And there's a high chance that the price will come down a little bit more. So all this that you see here, that's what I say to you. This is not a trending fast. Well, how do we know that it's not trending fast? Because the price on this quarterly chart is consolidating. Can you see it? Do not violate the Elliott wave pattern. Does not violate the market pattern. A corrective wave will be either in a triangle or a horizontal channel. Okay, this is a correction taking place. In this session here, the price was in a what? A rising channel. This session here up, okay? Rising channel, okay? So a correction is still in place, and there's a high channel. We may bring it all the way here. A little bit below will be better for the expanded flat correction. It makes sense? Are you getting it now? Okay. So you know the internal wave of the flat correction? 3, 3, 5. Okay. There are different type of flat corrections. Go to www.24elliottwaves.com. Gently, when you have time, watch one video at a time, don't push it too hard, and learn slowly, okay? All right? So you know the internal wave. When do we have a flat correction? After a strong bullish move or a strong bearish move, okay? All right? If we are talking about an expanded flat correction, the B session of the expanded flat correction will propel the price up to the zone of a 138% Fibonacci extension zone. Do not forget the 138% Fibonacci extension zone if you are dealing with, okay, a flat correction. Why is it flat? It's flat because, okay, the correction is not very deep. You will see it clearly on the 50-minute chart. Sometimes you'll see not very deep because the price went up, okay, strongly, okay. The bullish momentum is exhausted, is finished, okay. So we have a flat correction, okay. So 3335, okay. 138% Fibonacci extension zone. You don't want to forget that, okay. You don't want to forget that. One can use the flat correction to forecast what the price is likely to do. So you see here, 1, 2, 3, 1, 2. Here you know that there's a high channel that will continue to go up. So your first target is the top here. Second target, this one here. Gently. Ultimate target, 138% Fibonacci extension zone. Price reaches this level, my friend, all right? Because we have another pattern that we call ABCD chart pattern, all right? You highlight it. You apply top-down trading method here without assuming anything, without behaving like a scientist, thinking that exact size there is definitely going to go down. But if you force it and you see the price form instead A, B, C, D chart pattern, you are in trouble. You will extend it more. So as the price reaches the 138% Fibonacci extension zone, you apply top-down trading method, and as it's happening, or you want to wait, 1, 2. Okay, then you take it from here. Okay, 3, 4. Now we are here. As a day trader in this session, you will be giving priority to sell signal. Okay, because you know that it's likely to go down. So the professional Elliott wave trader that recognize this pattern during we are on the quarterly chart, they will be giving priority to bearish signal alone because they are not interested to buy. Here they will be giving priority to bullish signal, okay, and so on and so on. So you can forecast what the price is likely to do. So here you take it, okay, and then you will bring it down, and then you take it up, and then bring it down, and you feel so powerful and happy, okay? Remember the last thing that I said also, very important, another secret about the flat correction. During the B session of the flat correction that propels the price to the 138% Fibonacci extension zone, we are likely to see what? A low trading volume. This is a beautiful pattern. Why? Because you see, a corrective wave has propelled the price to display a new high. It's a contradiction. It must be an impulsive way that propels the price to create a new high. If we see a new high or a new lower low, but it is a corrective wave, it's a contradiction. So we must, in an uptrend, sell and buy in a downtrend. So the internal waves, so instead of looking at the price, we look at the internal wave, we look inside the price. So we see 1, 2, 3, this is a corrective wave. It's not an impulsive wave, it's a corrective wave. But the price form a new high. Should click straight away, say this doesn't make sense. Okay, it doesn't make sense. A corrective wave cannot propel the price to display a new high. If that's the case, we must sell. Okay? But we don't sell anyhow. We apply a top-down trading method without violating the market pattern. Okay? Because sometimes traders learn it, they know it, but they apply it wrongly. Okay? And they say the method does not work. Look, every method has a level of risk, and it's all down to how we apply it. Okay? People can do amazing things with knife, but people can do horrible things with knife too. Okay? So this is it. All right? So the B session of the flag correction is very interesting. We have a low trading volume. So this is another contradiction. Price going up, display new higher high, or price going down, display new lower low. But under a low trading volume, it's a correction. Just remember that, okay? Price going up from a new higher high, price going down from a new lower low. But under a low trading volume, it's a correction. It's a rally in a downtrend, or it's a pullback in an uptrend under a low trading volume. Okay. So here we see that something strange is happening here. But now, because we are Elliott wave traders, we look inside the price. We see the internal wave, a corrective wave. Now it becomes clear to us that it's a high channel. This Fibonacci level 138% is a convergent point. We position ourselves carefully, okay? And we take it down like a professional traders using a top-down trading method or a multiple time frame trading method. If the signal fails, you come out. You just shake yourself a bit, come back again in, gently. Or you use tools that can allow you to control the risk. So to summarize this video, this is the end of this video now. A flag correction, we must know first the internal wave, free, fine, okay? The B session of the flag correction, very often we propel the price into the zone of 138% Fibonacci extension zone. During a B session, we are likely to see a low trading volume. A flag correction is a correction, should be either, okay, should be in an horizontal channel, okay? When do we have a flag correction? A flag correction usually takes place after a strong bullish move or a strong bearish move. It makes sense? We can use the flag correction to forecast what the price is likely to do because we have the key, the internal waves allow us to know what is the next move of the pattern. 1, 2, 3. Even at 1, 2, we are expecting another move up. We reach the level of 138%. We are expecting 5 moves down. This is how we forecast the market. It went down. So if you don't want to rush, 1, 2, and then here you are. You receive a signal, you sell it. You want to wait because you know it's going down. You want to give priority to signal, to sell signal. In the C move, you give priority to sell signal. In the B move, you give priority to bullish signal. So you can be patient and load it here, down, wait for other people to push it up a bit, and then you load it again, down, out. Okay? It's beautiful, isn't it? It's gorgeous. Okay? And also, it's also powerful. All right? If there is something you do not understand, put in the comment section. All right? If you think that, okay, it's all mumbo jumbo, put it in the comment section. All right? And if you like it, feel free to share it on Google+, on Twitter, and also on Facebook, okay? Any question, put in the comment section. Any suggestion, put in the comment section. I will be recording more video to answer, okay, these questions. If you love our video, feel free to subscribe to our channels. We are the TSTW24 traders talking about, okay, Nasdaq trader is analyzing Elliott wave, a flat correction pattern. The financial instrument that we are analyzing is stable stock, EPIC SPLS, listed on the Nasdaq 100 index. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders. Speak to you soon.